Let's take a look at your market news now. Asian markets enjoyed broad gains for third day on Wednesday, but investors moved more cautiously as they took stock of the latest trade developments and possible headwinds. New York provided another record lead on lingering optimism after the United States and Mexico reached a revised free trade deal and Canada began talks that could see it join them. The little optimism there was clouded by caution ahead of a looming deadline on tariffs with China. The Nikkei gained 0.2% at close. Hong Kong's Hang Seng managed a 1/10 gain, with the Shanghai Composite Index falling 0.3% by the end of the day's trading. The S&P 500 and the Nasdaq edged up to record closing highs last night for the third consecutive session as investors struggled over whether to take profits following a rally on positive developments in trade disputes which have vexed markets for much of the year. The Dow Jones Industrial Average inched up to 26,064. The S&P 500 was also marginally up to 2,897. And the Nasdaq Composite Index was the biggest climber, gaining 0.15% to end trade at 8,030. Let's go to the Johannesburg Stock Exchange now. Arabile is there. Good news for the JSE yesterday, but seeing a lot of red there today, Arabile.
Yeah, indeed, the JSE going well above 60,000 points as well by close yesterday. Finally up on the year, around 0.9% at the close of trade yesterday. But it doesn't seem that the same message has filtered through to the JSE today. So certainly a little bit of a stubble, around 1/3% loss thus far. But despite that, we'll unpack just exactly what's going on in a moment or two. For now, let's see how the European and local markets are faring. Well, as you can see from that picture, negativity coming out on the local exchange, despite Europe seemingly being in a bit of a green picture. Michael Traherne is a portfolio manager at Vestact, and he joins me now as we unpack that market. Michael, thank you so much for the time. That 60,000 point mark, quite key, quite significant as well, but seemingly not rushing over onto today's trade as well, seeing some negativity there on the board.
Yeah, I think you go through 9 straight days of gains. At some point, it's going to give you're going to go sideways or slightly down. That's today. Hopefully, we resume our green trend in the rest of the week. Only time will tell. But we're in an environment at the moment where there's very little data coming out, quiet in terms of volumes. On Monday this week was a public holiday in England, so quiet on the European front. And then this coming Monday is the US holiday, Labour weekend. So these last 2 weeks, a lot of fund managers, particularly global fund managers, are in the Hamptons enjoying the summer in the Northern Hemisphere. So it's been rather quiet, and we're going to have to see in 2 weeks' time exactly where the market trends after that.
Yeah. On the local front, however, in terms of you know, year-end news, financial results news as well, even today, seeing the likes of Adcock Ingram, it's been a pretty mixed picture, hasn't it?
Yeah, look, the general trend has been negativity. A couple of companies reporting it, saying first 6 months of the year, Ramaphoria was clear. You could see increased sales, you could see increased confidence, but the last 6 months that's not been the case. Ramaphoria has definitely faded, and the land debate is in the forefront of some clients' minds, and general investing has dipped, and that's the general trend across all companies. You had Advitech out on Monday, the schools group, and they're saying that they're seeing a number of people emigrating, and that's hurting their numbers. So it's all related to confidence and all related to lack of growth locally at the moment.
Yeah, up 0.9% for the year is the JSE All Share. So we're finally in the green, but today dipping down around 0.25% thus far. is one at this point going to say to themselves that this may not be a sustainable take? And are equities still the place to be in, considering the marginal gains you're seeing for this year?
Yeah, long slog. We basically 8 months, so 9 months into the year, and we're not even up 1%. I mean, you might as well left it in an interest-bearing account. You would have been able to sleep comfortably at night and got better returns. But over the long run, equities is definitely the best investment class to be in. Apart from owning your own business, equities gives you a regular dividend stream. You've got professional managers trying to grow your business. The trick, though, is to be invested for the long term and ignore the periods where there's downturns. And that's the hardest part to do, and it's definitely easier said than done. In the last 3 years in the JSE is evidence of how hard times can hit. You would have been better leaving your money out under your mattress. The JSE is negative, basically, for the last 3 years.
So keep doing what you've been doing is essentially the aim, and not try to change things a bit too much.
The best advice we give to all of our clients, say put money away monthly, you average in at long term. Me personally, I stick it straight into the tax-free investing account.
Yeah.
I don't look at it. I know I'm only going to look at it in 40 years' time. That's when the number matters, not what it looks at intraday. More than enough research has pointed to the people who've done the best in the stock market are the people who either forget that they've got a stock account, or the broker didn't know they died and kept holding the instrument. So it's best to ignore things.
That's the difference in being a value investor, of course, as well. But 14.37 for the currency as well. Some weakness then seeping in. It seems that it goes from one point to another. Some point we're at 14.16. Excuse me, but we just keep floating about. Where exactly do we head to? Where do we find a sense of stability, if we can call it that?
Yeah, we bounced to 14 yesterday afternoon when it was briefly, the media assumed that the land expropriation bill was being removed, only to read the fine print that it wasn't the actual bill, and the ANC was still sticking with their policy. But I think in general it's still a dollar strength story as opposed to a rand weakness story. There hasn't been much local news out that would affect our currency. Big news out though today is US GDP for the second quarter. That'll definitely be a driver in currencies going forward. But people are seeing the US dollar as a safe haven, and whenever we've got any fluctuations anywhere, particularly in your emerging markets, it's a flee to safety, strong dollar, weak emerging markets, and unfortunately we're at the receiving end of that.
Yeah, and Moody's as well yesterday putting out some sort of assessment on it and really being worried about South Africa's weakness when it comes to the local currency as well. Should we be concerned that it hasn't gone back beyond 14 rand against the US dollar? It hasn't dipped below that mark again, considering the blowout that happened when the issue with Turkey happened?
Yeah, if you have a look at our currency over the last 2 years, your average is around the 13.50 mark. And that's, we've been gyrating up and down around that. We've got as high as close to 15. Earlier in the year, we got the low 11s. But it's been mostly around that 13.50 level. And that's probably where I think it stays, particularly up until our elections, assuming that obviously we don't have any major negative news locally, but also assuming the US dollar doesn't just have a lot more strength. We're expecting 2 more interest rate hikes in the US this year, and Morgan Stanley predicting another 4 interest rate hikes next year. So it's a lot of interest or increased interest rates in the US, higher interest rates.
Do you think that'll happen in South Africa? Any more interest rate hikes in SA, considering how tough it's becoming? Inflation also headed a little bit higher.
Yeah, so I'm very keen to see inflation numbers for August, because that's particularly when the currency's weakened the most. We get that in September, the day before the MPC has their rate decision. I think that will influence it. I think next MPC decision still hold. But depending on where the long-term trend is, they might be forced to raise. I do think Lesetja Kganyago is going to be very reluctant to raise. We don't have economic growth coming through, so it's not a case of demand push inflation. It's a case of we importing the inflation. And that's something that interest rates is a bit of a blunt tool to use to try bring inflation down. So. Yeah, I'm hoping as a consumer and as a household bondholder that interest rates don't go up.
At least stay the same, certainly. Michael Traherne, Portfolio Manager at Vestec there, as we unpack the markets. Well, as you can see, a tinge of red flowing out through today's market, perhaps breaking what has been a 9-day winning streak on the JSE. Quick look as well at your Bitcoin, just above 7,000 US dollars there for one. It's pretty much flat, however, if you take a look at it this afternoon. Well, that's where the stops this afternoon. Nompumelelo Nzinga joining you right after this. Do stay tuned.